What's up, boys? Welcome back to another video. In today's video we'll be talking about the types of trading there are and the concepts, the most famous concept I use for my trading. So let's get on with the video. Let's go with the types of trading there are. So type of tradings there are some of them, but they're basic ones. So first one is forex. Okay, so forex is foreign exchange, okay, where you guys trade pairs with another pair. For example, in this case GBP against the US dollar, okay, and the euro against the dollar, okay. That will be the forex trading. Okay, now we have commodities. What do I mean by commodities? Commodities can be like gold. So gold and GBP, these are the two only that I trade. So gold, so yeah, gold against the US dollar, and silver, okay, XAD against the dollar. Yeah, this will be oh my god, yeah, so XAD against the dollar, that's silver against the dollar. Forex, we go GBP USD against the dollar. Okay, now we have stocks trading. I have everything written up here because I know I will forget about it, but still. Now we have stocks trading. What do I mean by stocks trading? You guys are basically trading a company stocks. It doesn't get me reason. For example, Nvidia, okay. Now the next one we go, let's go with Apple like this, or we have TSL, which is Tesla. Okay, that will be stocks trading. Okay, let me put it neatly here. And the last one that we have is cryptocurrency. I know you guys must know this one, cryptocurrency. Okay, which ones are the most famous? BTC against the US dollar, and ETH, which is Ethereum against the US dollar. I'll show you guys right now how they look like. So first we have to go with the forex one. Okay, so here on our search we click forex. Okay, let me remove this. These are all forex pairs. Okay, these are all currency pairs that exchange against the Canadian dollar, the Japanese yen, and everything. Okay, now let's go with stocks. These are all the stocks that you guys can trade. And let's go with the commodities now. Commodities can be this. Let me show you guys. Where is it? Oh my god. Futures, I think is here. Yeah, here. It's not futures. It should be here. BTC. You guys can see it here. Okay, let's see economy bonds. I don't know why it's not showing here. Let me show you guys. Stands for XAU. Okay, it's an index, but I don't know why. Index, yeah, showing here. Yeah, here. So here is the commodities or indices, you guys can call it. And the last one we go here is crypto. Okay, these are the crypto guys that you guys can trade. You guys can see all this is crypto. Okay, so these are the types of trading that are in forex. Okay, the only two things I trade is GBP, okay, and gold. If you guys don't believe me, I'll show you guys right now. Let me just pull this up. You see GBP, and then we go, not this one, sorry, there we go, gold. Okay, these are just for like checking normally. This is gold again. Okay, now what concepts are in trading? The concepts I use is ICT. ICT stands for by inner circle trader. It's by a guy that calls himself ICT, also known as inner circle trader. So now that we have our ICT concepts, okay, let me read for you guys each by each. MSS stands for market structure shift. LQ stands for liquidity. FVG for fair value gap. IFVG for invert fair value gap, OB for order block, BPR for balanced price range, AMD for accumulation, manipulation, and distribution, DNP stands for the discount and premium, SSL stands for sell side liquidity, and BSL stands for buy side liquidity. So now that we know this, let's start first with the BSL. Okay, let's start from the bottom. Okay, here we have our chart. This whole GBP USD here, you guys can see GBP USD chart. What will be our BSL? Okay, buy side liquidity. Okay, let's mark it. As I told you guys in another video, BSL, let me just put this like this. So as I told you guys in another video, liquidity is always at the highs or the lows of our trend, where mostly people put the stop losses. So basically it's like where the people play the stop losses and the market always tries to hunt them. Okay, so now that we have here all highs and lows, let's now where will be our buy side liquidity. This is buy side liquidity, okay, and this is buy side liquidity. Okay, what will be we targeting? Okay, this is Friday, so this wouldn't count. Okay, what would I have done? I would have entered here. For example, in this case, I would have entered here, okay, like this, and I would have targeted this because I know the market is always moving against liquidity. Okay, so now that we have our buy side liquidity, let's take it off and let's go to sell side liquidity. Okay, let me move, guys, this and this. Okay, so same as buy side liquidity, we have sell side liquidity. Instead, the buy side liquidity is at the top, so sell side liquidity will be at the bottom. So this is sell side liquidity. Okay, this is sell side liquidity, and this is our sell side liquidity. Market always wants to come down to this, take the stop loss of the people out, the liquidity being in this case, and go to the other side. Okay, that's that's sell side liquidity. Okay, now let's take this both off. Now we have DNP, which stands for what's called a discount and premium. I have this one, but this one is, oh my god, where is it? Here I have this one, okay, but this one is a little bit complicated for you guys, so let's use it with a box. Where do you get what is discount and what is premium? Okay, let me first mark you the 50% level. This is the 50% level. Okay, let me mark here, right here, 50%. Okay, for example, you want to go to a shop, okay, you want to sell high and you want to buy cheap. What do I mean by that? So whenever the market is in this zone, this is the 100% zone. Okay, 100, you can say. Okay, this is the 100% zone. Okay, so whenever the market is here, you guys want to sell from here. Okay, this is always sell. Okay, you want to sell highs and take profits at discount, basically. But whenever this is the 25%, okay, 25%. Yeah, so now that we have this, you want to buy in discount, you want to buy below this 50%. Okay, below, has to be below this 50%. Okay, so if you buy here, you can take profits at the premium here. Okay, this is how you mark your what's called premium and discount. Let me remove everything for you guys and let me show you a live example of how this would have looked, because it's a little bit difficult to understand, but trust me, it gets easy once you get it. So if I remove everything here, now that we have moved everything out, let me show you guys how to mark the discount and premium. What do you guys want to do is you want to mark the swing high to the swing low. Okay, so like this. What do we see, guys? Here we see the market has tapped into a 25% premium, sorry, discount zone. We could have bought the, this is for scalpers only. If you guys want to buy shorts, you know, I mean, you can do as a swing trade as well. I don't really use it that much. Okay, you never want to trade this move. okay? You want to trade only the 50% move. What do I mean by 50%? You only want to risk a little bit to make a more you want to risk a little bit just to make more. So in this case, we can see the market has tapped into a premium zone, okay, or 100 zone. Let me mark it here, 100% zone. What I do from here, guys, a sell of an inverted fair value gap, okay? That will be a confluence. Where do I see an inverted fair value gap? Here. I put my entry point right here at the body close here, stop loss here. What am I targeting? We are targeting sell side liquidity, okay? We are targeting sell side liquidity. Where is sell side liquidity? Right here. Let me mark it for you guys. That's our sell side liquidity right there, guys. And you guys can see easy as that, okay? It does not get more easy than that. I mean, I'm telling you guys, once you guys get it, trust me, it can become easy. Now let me show you guys what's called discount zone buy, okay? We have found our discount zone, okay? Let me show you guys how we mark it. We mark it from this swing low, okay, to this swing high. The first one, okay, the second one, or you can do this one, okay, then you guys can extend it. So just like this. What do you want to see in this one, the discount one? We want to see liquidity. So all this liquidity is gone after it has taken this out. What am I looking for here? We're looking for inverted fair value gap, okay? Trust me, guys, once you guys get the inverted fair value gap, it's free money, bro, I'm telling you. So we put our entry here at the inverted fair value gap's body close right here. We put a stop loss just below this. What are we targeting? We are targeting buy side liquidity. Let's go back in time to see if there's any liquidity. I'll check it after, okay? What do we see here? We see here there's liquidity here, okay? Almost double top liquidity, okay? So we mark it. That's a 2RR right there, guys. Easy as that. It does not get more easy than that, I'm telling you guys. It's easy once you start getting it, but if you don't get it, trust me, it's gonna be an L, okay? So now that we have done our discount premium, let's go with our AMD, okay? Now that we have marked our AMD, let me show you guys. So AMD consists of 3 sessions: Asian session, which is Tokyo session, London session, and New York session. What do you want to see in the Asian session? We want to see in the Asian session the market needs to be like this, okay? It needs to be consolidating, okay? So in this case, we can see market is consolidating, which is called accumulation. London will do is either take out the high or low. So in this case, took out the low. That's a manipulation, and the market is gonna keep normally moving up, down, up, down. What do you want to see in the New York session? In the New York session, we want to see either the London high or London low taken out. In this case, we can see it has taken out the London high, and we can see a massive push down. This will be called distribution. Accumulation is the market gets together, okay? It's not making any big moves. Manipulation is when the market either takes out the high of the Asia or the low. That would be a manipulation. And distribution will be when New York session takes out the high or low from the London session, okay? Now let's see in this live market. Perfect, guys, because this is one of the trades I called recently. I think this was on Thursday. Yeah, I'll show you guys. I think I've showed on my Discord, but yeah. What do we see here? We see Asian session is accumulating, okay? It's accumulating. What do we see in the London session? London session, what we see here, guys, is the market takes out the high, okay, and then pushes lower, okay? What do we see in the New York session? We see in the New York session the London session's low, which is this one in this case, got taken, okay? Where will I place my entry? That's a nice question. So basically, we want to look for inverted fair value gap. Where do I see an inverted fair value gap, guys? Right here. This will be my inverted fair value gap. I enter the body close, in this case here, okay? In this case will be your body close here, and I put my stop loss here, okay? And what am I targeting, guys? We are targeting buy side liquidity. You can target more, okay? But in this case, I targeted this, okay? Let me mark it for you guys. I've targeted this just like this, okay? And just like that, guys, that we hit our TP, okay? I think it was live. My trade was live, and my stop loss was here. We caught a 3RR. I mean, that's crazy. It works all the time. It works all the time, okay? I don't know what's going on, what happened to my hair, but my hair got fucked, man. I'm telling you, my hair got fucked, man. I look good, I can't lie. Okay, let's go now with the next. Now that we have done our AMD, accumulation, manipulation, and distribution, let's go now with our BPR. Our BPR is a balanced price range. Now that we have this on the right here, let me show you guys what a BPR looks like. Okay, a BPR is when two fair value gaps overlap. Okay, a BPR here is when two fair value gaps overlap. Let me show you guys this in the live market. Either is two fair value gaps overlapping, or one inverted fair value gap and one fair value gap, or the two inverted fair value gaps overlapping. We have found one fair value gap here, inverted fair value gap and a fair value gap. Where do we see here? We have one inverted fair value gap right here, and we have a fair value gap, another one right here. Okay, what do you want to see the market do? We want to see the market come down to these levels, okay, to continue pushing up. What do you want to see? We want to see the market coming down to this level, so the fair value gap, inverted fair value gap, to continue pushing up. Let me show you guys another example. A great example. Let me show you guys now. What do we see here? We see a inverted fair value gap. I inverted fair value gap here and here. We're gonna mark this one, okay? Let's mark this one like this, and let's mark the other fair value gap like this, okay? Just like that, okay? What do you want to see? We want to see the market coming down to this level right here, like it did here, to continue going up. We want to see the market coming down to this level to continue going up, okay? Let me show you guys another example and we're clear on this one, okay? In this case, we are bearish, okay? We want to be looking for sells. Where do we see a fair value gap? Okay, we see one fair value gap here. Let's mark it. This is an inverted fair value gap, okay? Let me just write here inverted fair value gap, and let's mark now a fair value gap, okay? This would be your fair value gap. Let's mark it. What do we want to see? We want to see market coming down, coming up to these levels to keep pushing the price down, okay? And this is the last example I've done, okay? I've done for BPR. Let's go now with the order blocks, okay? We have here our order block. Order block is a specific price zone on a chart representing significant institutional buying or selling. What do we see here? An order block gets made before a big push up. An order block gets hit before a big push down. An order block gets made before a big push up. An order block gets made before a big sell up. Okay, now let me show you guys this on the live market. Right here we have our order block, okay? We mark the first three candles before a big push down. Okay, we don't want to see the market straight like news candle. We don't want to see the market straight going down. We want to see it slowly going down, okay? In this case, it has made a order block here. What do you want to see? We want to wait. We want to wait for the market to make an order block, okay, to hit the order block. In this case, has hit the order block here. This is a valid order block. An invalid order block will be when a candle closes above, when a candle body closes above, when the body of the candle closes above, not the wick, the body. If the body closes above the order block, is an invalid order block. It gets converted into a breaker block. We don't use that in ICT. Okay, now they has hit our order block. We want to see for inverted fair value gap. Where's our inverted fair value gap? Or inverted fair value gap is right here, okay? Let me mark for you guys. 5 minute IFEG. We want to enter at a body close below the inverted fair value gap. So right here we enter, okay? We put our stop loss just above this swing high. What are we targeting? We're targeting this liquidity down here. This is another move I catch. This was on new session. Okay, we want to target this liquidity right here, guys. This liquidity right here, okay? Just like that. That's a 2 RR. That's a 2, almost 3 RR. Guys, trading is easy, but listen, you can't make money every single day. Trading is easy, but you can't make money every single day. So that will be our order block, okay? And now for my favorite part, we want to see what an inverted fair value gap is, okay? Let's get on. IFEG stands for inverted fair value gap, okay? Inverted fair value gap gets made when a fair value gap gets inverted. What do I mean? It body closes, okay, below the fair value gap or above the fair value gap. We can see an inverted fair value gap before a big push to the downside, and we can see the same one before a big push to the upside. So right here we have a nice inverted fair value gap example. This is our favorite gap by going inverted here because it was closing below, and this gets converted into a BPR as well. So we wouldn't just enter off here, okay, at the body close. We will want to see the market, the price come back to the BPR, and then we can enter. So in this case has come back, we enter here, we put a stop loss right here, and guys, we want to target liquidity. Let's see where's liquidity. I don't know what happened to my candles. Okay, where's liquidity? Let me go back in time. So here there's liquidity here, okay, liquidity that has not been taken, okay, that will be our first liquidity, okay, this will be right here, our first liquidity zone. Then if we see is a manipulation, because this is AN session accumulating, we can see some manipulation has gone to the downside, okay, we can go for a little bit more, okay, I will go for this, and that's it, because I think there was news on this day, London, okay, that will be our inverted favorite gap move, okay. Now I need to show you guys what a favorite gap is and what it looks like. First of all, let's go with our favorite gap. This will be your favorite gap, okay. Before a big push comes a big gap, and that's our favorite gap. The market comes down to the favorite gap, respects it, it does not close below or above. Body closes, it doesn't body close, that's a favorite gap. If a body closes, that's an inverted favorite gap. Let me show you guys how to mark a favorite gap. We want to see 3 candles, okay. We mark for the first candle's high, okay, first candle's high to the third candle's low wick, okay. So the first candle's top wick to the third candle's last wick, okay. We want to see this before a big push. You guys can see here it's made a big push, okay. That's a what's called a price imbalance, okay. We want to mark it like this, we want to extend it. What the market will do naturally, it comes back, taps into and continue goes up, okay. It continues going up. If it's an inverted favorite gap, it body closes below this, you see the block, it body closes below this, that's an inverted favorite gap, okay. Now let me show you guys this in a live market, okay. Here we see a nice example of a favorite gap, okay. We mark from the low candle, first candle's top wick to the third candle's bottom wick. We mark it, this is our favorite gap, okay. Let me mark it here. Market comes down, respects it, and continue going up. It continues going up, okay. Same in this case, okay. If you see here in the high time frame, there must be a favorite gap that's going to respect it here. Continues going up. Same here, taps into it, continues going up, okay. So this favorite gap, market, this is a big move. Respects it, continues going up. Same guys, here, taps in, continues going up. That's a favorite gap, okay guys. I am going to cover the liquidity topic because I think we already done it. So let me show. I will not show you guys an example right now, because I can't be asked. Okay, liquidity is where people's stop loss are. Liquidity is where big orders are. Where people like me and you, we put our stop losses there. That is liquidity. The market loves to go down that liquidity level. It rates it and continues going up to the moon, bro, to the fucking moon. I'm telling you, that is liquidity. Our next topic is a market structure shift, okay. As here we can see a nice lower high, lower low, lower high, lower low, lower high, high low, lower high, higher low. Where's our market structure shift? Right here, okay, right here where the market closes above the top wick candle, okay, and taps into favorite gap, it doesn't matter. Let me show you guys into a live market move. So now that we have marked our market, if we can see here this no wick, you can see this candles wick go raided by a body close candle, okay, and this is supported by 5-minute favorite gap. Market, it taps into it, okay. The market pushes down, like down bad. This is market structure shift, okay. When it closes above a wick and is supported by favorite gap or inverted favorite gap, okay. In this case, this is a market structure shift, okay, but in this case, this one is supported by a BPR of one inverted favorite gap and one favorite gap. what the market does after it makes a market start to shift, boom, to the upside, boom, all-time highs, everything crazy that. Okay, so this is a market start to shift, guys. We have completed or what is trading, types of trading on our Ict concepts. Okay, this was a little bit long video, but I show you guys like simply and how to identify them, where to place your entry. I mean, there's more to know. I'll be posting this on my trading playlist, and I hope you guys like this video. If you guys want to join my Discord, it will be in the description. So thank you guys for watching. I'll see you in the next one.